We're here to talk fintech for climate resilience, and I'm really delighted to be joined by 4 expert panels on this area. We have Shirley Mburu, who is the Teka Africa lead and senior consultant at BFA Global. We have Timamame Wanyooki, who is partnerships and ecosystem manager at Catapult, Daniel Block, impact investor for Mercy Corps, and also Nzomo Michael, manager at digital innovation from FSD Africa. Thank you very much for joining us, panelists.
Thanks, Sarah.
So what do we all have in common? Well, it's really interesting to think about what do all these people, all these organizations have in common. There is one thing that we do have in common, which is launching and funding talent to foster climate action. I will give each panelist in one moment a chance to introduce themselves and also talk a little bit about their organizations. But first, let me focus the discussion. So entrepreneurs are beginning to vote with their feet, and they're starting their own pro-climate ventures. We also heard some of this being discussed in our earlier discussion today with Syed and Viola. Yet the startup activity is not happening fast enough, nor is it distributed evenly across the globe. Given the increasingly urgent timeline to tackle climate change, we've seen so many instances of climate issues this year alone, touching all continents across the globe. What is the role for venture launchers to facilitate innovation and also for others to accelerate and scale that innovation? How can we adapt the venture launcher model to emerging market ecosystems while focusing on climate resilience and adaptation? And that's some of the conversation that we're going to have today. So as promised, before we start getting into all of that detail, let's first understand a little bit more about the journey each of our panelists and their organizations are on. So we're going to go around in turn. Timamame, we'll start with you.
Great, thank you. Hi, everybody. Timamame, I'm Partnerships and Ecosystem Manager at Catapult, Africa specifically. I think a big part for us where we started out 5 years ago is just being that impact VC and wanted to just largely focus on climate, ocean, and agri and food solutions, climate being a really big one. How could we support startups in climate that weren't as heavily funded as before, but are tackling an issue that's huge for our future, huge for future generations, and how can we support them? Who was supporting these entrepreneurs? Not a lot of people. So we wanted to back that and see how these solutions came about. To date, I think we have 23 in our portfolio and about in Africa, and about 5 of those being in climate. So that's a great thing for us. And yeah, we're excited about that.
Excellent. Thank you so much. Let me hop over to Nzomo.
Thanks a lot. My name is Nzomo Michael. I'm Manager Digital Innovation at FSD Africa. FSD Africa is a specialist development agency funded by the UK aid with a focus on strengthening the financial markets in Africa, where we look at different aspects, capital markets, we look at risk and resilience, we look at climate resilience, and supporting ecosystems in terms of innovation development to address some of those needs around climate tech. That largely speaks about my role.
Thank you so much, Nzomo. Let's hop over to Shirley next.
Right. So BFA's journey began about 3 years ago. So BFA Global is an innovation and consulting firm that believes in combining finance and digital innovation, venture building and investment expertise to improve the resilience of and the well-being of the marginalized populations. So over time, it became very clear that the marginalized populations indeed are the most vulnerable when it comes to climate change. They're the least prepared and they're the least responsible. So we needed to be more intentional and proactive in terms of the solutions that we help develop to make sure that they have the ability to help the marginalized anticipate, prepare for, and respond to climate changes and events. Just about 3 years ago, our Catalyst Fund began to scout and find innovators working towards solutions that promote climate resilience. In this last cohort for Catalyst Fund, the entire cohort focuses on climate resilience, so not just a few of the companies that we have taken on. And now we have Teka, which is focusing on creating ventures for climate resilience. So, and I guess I need to start with who I am, but I'm Shirley. I'm the Teka Africa lead, and I'm also a senior consultant at BFA. Thank you.
Thank you so much, Shirley. And last but by no means least, Daniel.
Yeah, hi all. So I'm an investment principal with MC Ventures. We're an early stage impact fund that invests in frontier technologies to drive impact in emerging markets. And right now our portfolio is around 40 companies, primarily in Africa, but some in Latin America and in Asia as well. And we've been investing in businesses that are driving resilience for communities and individuals in frontier markets for some time, and then sort of on the leading curve in terms of looking at new technologies, blockchain, crypto, fintech solutions, ag tech solutions that can really support those communities when it comes to adapting to changes in the world and being more resilient against those shocks. And just similar to what several of my fellow panelists have said, we've seen a lot of funding, perhaps too little, but still the vast majority of funding in climate going towards mitigation. And yet today, communities in a lot of these markets, as Shirley said quite eloquently, are feeling the effects, today, yesterday, last year, 2 years ago of climate, and the opportunity to drive some of our experience in investing in frontier technologies with our knowledge of how to leverage those technologies to support populations to be able to better withstand the shocks that climate change is exposing is something that we felt well positioned to do and see as a huge market opportunity as well. So yeah, excited to be here with you all and to share more about the specifics of what we've invested in, what we're looking at, how we've been able to collaborate. I think with all the organizations on this panel as well. It certainly takes a village, as they say, and great opportunities to collaborate with everyone. So.
Thank you so much. I couldn't agree with you more there. It takes a village, and collaboration is such an important and key conversation, whether we're in this stream or in any of the others. In fact, that kind of concept of collaboration, working together, is really important. And before I launch in and sort of get you kind of to describe some of the practical work that's happening out there, some of the ventures that you're supporting, I want to first go across to you, Nzomo, and maybe you can just make sure that we're all on the same page. What is Fintech for climate resilience? And maybe you can give us some background info and give us some sort of information there before we launch into hearing a little bit more of the specifics.
Thanks, Sarah. The what and why as FSD Africa invested in this area is one is a very nascent area for us. We are discovering much as we are investing in it, because we commissioned a research back in 2020 with the Climate Policy Initiative, and what the research did is that it showed that especially for Africa, it's receiving 50%, around 11% of the required investments in this area. In terms of real figures, it's around 30 billion USD, as opposed to the expected 277 billion, which is expected as inflows every year, to support climate resilience tech. And the reason why, as FSD Africa, we decided to invest in TECA, which is triggering exponential climate action, which is where Shirley is. We are supporting that in terms of early stage innovators, where we are looking for solutions that could be standalone solutions, like prime insure tech, or the areas of embedded tech, that leverages existing investments or technologies around pay-as-you-go solar solutions, where we close the loop in terms of the entire ecosystem to ensure that the financing last mile or first mile is catered for. Beyond that is that we noted that a disparity in terms of the pipeline. So we're suffering a pipeline gap where only 10 countries are accounting for more than 50% of that inflow. Leaving the rest uncovered. So the reason for us to just focus on it in terms of investment. But beyond that is the opportunity that it presents for us. Looking at Africa, especially around accelerated urbanization, we are looking at exponential growth in terms of infrastructure. We are looking at rising demand for energy access, which for us is a great opportunity in terms of an investment perspective. So that largely was the trigger for us. But beyond that is, addressing the SDGs and being a responsible global citizen. For us, we thought that we required to take action to address the gaps and the pipeline drought that is in this area. Thank you.
Thank you, Anselmo. And really fascinating there. I mean, the money, as you're saying, going to just 10 countries of across Africa, and only 11% of roughly is what is needed. I mean, just those two statistics indicate how big a gap there is. But I love how we're now going to focus that conversation and try and look at what, as you said, what opportunities are there, right? We know that there's now opportunity for innovation. And you mentioned TECA. And so I'm going to first go across to Shirley and ask her, what is TECA? What is this opportunity? Do tell us more.
So as Nzomo mentioned, so TECA is triggering exponential climate action. We believe that we need ambitious and swift innovations to tackle the climate emergency. So TECA is a new program that was launched this year, and the purpose is to look for high potential individuals who have a passion for climate action to come together to form co-founding teams and develop ideas into ventures. I think that's summary.
And can you give us some examples of some of the companies that you're supporting in the blue economy space in particular?
So this first wave of TECA focuses on the blue economy, but not to say that future waves will not focus on the green economy or look at improving the lives of rural folk or even people in urban areas. We had to start somewhere. So some of the examples I'll give you, like in the blue economy. And Sarah, just to highlight, we don't have ventures yet. We are working right from the, I would say, bottom or the top of the value chain, looking for founders to form the ventures. But examples of ventures in the blue economy space I would give is an example of Abalobi, which is one of the companies we have worked with in the past in our Catalyst Fund. And they focus on promoting sustainable fishing, so making sure that you conserve the environment, but at the same time, enumerating or improving the lives of those gatekeepers, so the fisher folk. So the way they do that is they have a fishing app that tracks data and maps the fish stock from fishing to the market, providing higher prices for chefs or individuals who value traceability and high quality fish, improving the incomes that such fisher folk earn. Other examples are like Aquarech, which is based in Kenya, or say eFisheries, which is supposed to be a unicorn in Indonesia, but they focus on improving aquaculture. So as we know, fish is becoming a very sustainable way of gaining protein with growing populations. So and aquaculture is being adopted in different markets, but making that efficient and improving the income that farmers earn is the key goal for some of these organizations, whereby they have like AI feeders that feed the fish effectively, hence reducing the cost of fish feed, which makes up 70 to 80% of the food, of the cost for farming, and then mapping the fish to market at the right time so that there are no losses, and at the same time building profiles on the farmers to then link them to financial service institutions that provide suitable solutions. So you can sort of see how some of these innovators are using technology to develop the data that is necessary for creating other financial solutions and other solutions.
Thanks for looping us back there to the technology angle. I think I'm really excited to sort of hear that's the most interesting use of artificial intelligence I think I've heard so far in actually feeding fish. But how interesting, like you said, food is one of the biggest costs of raising those fish. And if you can do that in a productive way and reduce those costs, what an amazing use of tech there. And talking of using tech, Daniel, when you spoke, you started talking about blockchain and Web3. And I wondered whether you could give us some practical examples of some of the work that you're supporting around this area.
Yeah, absolutely. I think, we've tried to take a pretty open approach to the way that new technologies can be applied, not sort of as a end in and of themselves, but as a means to be able to unlock value. And so that's been a journey we've been on for a number of years now with crypto and blockchain. It's not the only thing we invest in, but we've been excited by seeing some of the Web3 use cases across multiple different sectors. We invest in companies as well as have some funding to provide to test out and pilot new blockchain and crypto use cases. And so maybe I'll start with the latter and give an example of one of the investments we've made as well. But yeah, one of the most let's say commonly or more developed markets, I think, in terms of fintech for climate adaptation is the insurance market. And so there have been a number of plays. We've invested in a couple. I know we actually co-invested in Catapult in one company, and it's a little bit more of a developed space, but effectively being able to provide an index-based insurance or a parametric product that doesn't require someone to actually come out to a remote plot of land and assess the damage after a significant weather event, but that can leverage rainfall data, geospatial data to basically automatically determine those that were in zones of damage and make those payouts. And so it's a great product designed well for a small farmer in remote settings. One of the challenges, though, is that a lot of the onboarding, the data collection, and the payout processes can tend to be quite manual and are not always as digitized as would be ideal for maximal efficiency. And so we designed leveraging the power of smart contracts that blockchain enables. We designed a pilot with a company in East Africa called Acre Africa that provides these insurance products as a means to digitize their underwriting process and then also to automate the payouts when there are weather events. So I think all of us can relate to, whether regardless of where we sit or what experience we've had with insurance, some of the challenges with filing a claim, waiting for payouts, going back and forth with insurance companies. And so, yeah, with this pilot, we sort of tested out how much increasing the speed of payouts and automating that process actually lead to greater farm uptake, higher retention rates, and increase the amount of coverage and trust required to scale insurance products. That's one example that we tested out earlier, actually last year, and have results published on our website in terms of some of the insights and value that brought to the company and farmers. And an example on the investment side that we've recently been exploring a lot more the intersection of blockchain and crypto as for transparency and for more seamless market making as a tool to increase the adoption and size of the carbon markets market. And in that vein, we've seen a lot of players that have been saying, the existing mechanism for creating carbon credits for sharing those carbon credits, selling them, and then sharing value up and down the value chain is antiquated. It's again very manual. It's highly cost prohibitive, and therefore it doesn't make highly impactful projects that are at a much smaller scale than let's say a massive industrial farm that's for gender agriculture in the US or Europe. It doesn't make smaller projects sustainable or achievable to access carbon credits. And so we invested in a company earlier this year called Open Forest Protocol, which takes those carbon credits, puts them on chain, and then they provide they help the channel and provide the upfront financing to allow for smaller projects in emerging markets to be able to access the financing to convert to either depending on the project, convert to biodiversity preservation or to convert from conventional to regenerative agriculture, or potentially even to look at other cases in terms of renewable energy or other ways for capturing carbon credits, and then to be able to share those credits back to end users that are actually driving the markets. And so I think that's another interesting example of the traceability and transparency that blockchain provides to unlock capital and to allow for a more open, seamless, frictionless market for the carbon capture. those are a couple examples. Happy to share other things we're looking at both in the blockchain crypto space on that side. But yeah, I think we've seen we're still early in this journey, but there's some interesting companies that are looking at ways to leverage blockchain crypto for real world applications. And when we're looking at Web3 use cases, for us, it's really about sort of how does this have the potential to? We don't know yet. How does it have the potential to drive deeper impact and create more value than existing systems? And we're excited to see if some of what we're testing and investing in over the coming years proves out that it can facilitate that. So I'll pause there for now.
Great. Thank you so much. I really think that, that there's the 3 T's that always sort of stuck out for me in what you said there, the kind of trust, transparency, traceability that blockchain can bring that's sort of into the dynamic there, whether that's paying out insurance, facilitating that kind of trust in insurance quicker, or as you talked about there, carbon credits and carbon markets. And for anyone listening that don't know too much about carbon markets and carbon credits, there are sessions on day 2 and day 3 of Pathway that I would highly recommend that you join to learn more if those are new terms to you. But let me come across to you, Timame. Can you give us, an example or two that Catapult are working with?
Yeah, happy to do that. I think just leaning on what Danny just said, I think what's interesting for us, again, just going back to what you said, it's all about traceability and the stuff that's happening. Because we do have a huge agri focus, a lot of our startups that we've invested in are looking at how, first of all, they can, say, provide insurance to farmers based on how they're treating their farms and what kind of data will come out of that. And a huge company that does this for us is Oko Finance, and one of our investments from Mali. And I think just speaking on also crop health, soil health, and making sure our farmers in especially rural areas or marginalized areas are actually following up and doing the right things. Our company, our portfolio in Nigeria, Rural Farmers Hub, does this. And they've built an algorithm that will kind of say what the soil health is at specific times of the year and what farmers need to be doing at specific points, which is really great. Again, you don't have to physically show up at the farm and confirm that. They've just managed to do that. And then we have Agri-Eye that have managed then to build the AI that he was talking about, and AI systems using drones and bots that could quickly fly over these farms, figure out what's going on in terms of climate, and then address that back. Why do we invest in such solutions? Again, food security is a huge part for us while looking at the things that we want to invest in. And these companies are kind of leading that, or they are leading that. So we want to invest in solutions that are as exciting. And we also have SenseGrass, who kind of do the same thing, but the difference is they use rover bots, but also then pick up the data, a lot of that data, using the big data systems they've been able to build and just figure that out. But I think the most interesting for us, I think there's been a lot of discourse on dairy farming and that supply chain and how that's affecting climate. So we do have our company Mumi in Tunisia, another portfolio company that's trying to stabilize that value chain and make dairy farming as ethical as possible, making sure the supply chain is stable, but while doing that. So we're really excited just to work with these. And I think I've mentioned all the ones on the African continent, but if you want to see a lot of our portfolio that do similar things in climate and also on the blue economy, I think our website is a good place to check that. But that's what's exciting for us now, at least on the continent. Yeah. Thanks.
Great, thank you so much. I mean, amazing sort of innovations that are happening. You're leveraging technology that it's happening across Africa. I mean, really exciting and things that I didn't even know that was happening out there. I want to dive back though to one of the things that Nzoma mentioned. He mentioned that there was a pipeline problem. So we're hearing that there are, and absolutely there is some amazing innovation out there. But I guess the question sort of is, why not more? How can we change that pipeline problem? How can we fill that pipeline with even more startup activity and innovation? So Shirley, I know that as part of the Techa project, you started to look at some of those barriers and pipeline issues. I wonder if you could just give us a couple of the key highlights that you found.
Yeah, so as mentioned, when we dived into this journey of working with innovators to solve for climate resilient solutions, we did not get enough applications, or we continuously did not get enough applications to go into our Catalyst Fund. And it's a conversation we've had with many accelerator programs or investors where funding may exist, but there are not a lot of good quality or even enough applications going in to seek the support to scale the solutions even further. So the idea of TECA was born, and FSD Africa, through support from FCDO, they came in and they conceived the idea with us, and TECA was born. So with TECA, we hope to sort of plug the pipeline, so come up with ventures that can then go into the different accelerators and be scaled into viable solutions. And we found that the climate problem is a huge one, and it's a complex one. So a lot of founders may want to tackle the issue, but they may not have enough ideas on how to go about it. And the issue of scarce resources. So how do they even get to the resources that are available, although scarce? Then the second issue is that because it's complex, the climate support community has not yet developed, particularly in Africa. It has not materialized to be able to provide the right support. Some of these problems are complex. They require scientists. How do you bring the ideas from the scientists to the innovators, match the interests, and they build together? So that's where TECA comes in, hoping to bring ideas, talent, and capital together, to mix those together to form startups even faster, to create a pipeline for accelerator programs like Catalyst Fund, like Catapult, for other organizations like Masiko Ventures, who are willing to fund pilots to scale some of these solutions out. And yeah, that's how we conceive TECA and are working towards that goal. So the goal is that within 4 years, the aim is to have 100 fintech ventures, not just in the blue economy as mentioned, but in the wider climate resilience space.
I will just ask you this question because I see it's coming from one of the audience, Shelley, is why did you start in the blue economy space?
So we had to start somewhere, that's number one. And we felt that green economy would have been quite obvious. And blue economy is like 10 years to 20 years behind, depending on who you speak to. So we like to work at the frontier, and we felt that it's an area that has a lot of opportunity that has not been tapped yet. We also had very good partners. We are working with the Great Blue Wall, who are experts in the space, Cordio, who are experts in coral reef restoration, IUCN, and others, and the web. So they have a good understanding of the blue economy, and that's where we wanted to leverage their expertise and their networks as well. So opportunity called us, as well as a good community to build together.
Brilliant. Thank you so much, Shirley. Good reasons there. I think it's exciting to see you at the you know, as you said, you know, at the frontier. And so I'd like to ask that question that, you know, Shirley was talking about those barriers, which were mainly around ideas, talent, and capital. Tamami, I'm going to come to you first. Do these barriers resonate with the work that you're doing with Catapult? And my second question to you, while I'm giving you the floor, is, you know, what is Catapult doing, particularly, I guessing, in that capital barrier to overcome? But I'm sure there's other things you're doing in the ideas and talents field too.
Yeah, I mean, I think each and every point that she mentioned, that Shirley spoke about, in regard to ideas, talent, and capital for the companies we support, we can see that. I mean, I would say we're one of the braver investors, and I mean, Daniel would probably say the same thing. Impact investment is very patient. So we're very patient and like very open to investing in these solutions, even though investment didn't come in a lot in the past, because we have an interest. But I think with the expertise at Catapult, I'll just say the way our fund works with leaning on the accelerator program, we are trying to push for more than advocacy for climate startups and ocean startups. We're also trying to give them more education, because we have studied into these sectors and studied their needs. So what does investor readiness then look like for climate solutions, and how do we get them ready then to raise follow-on funding past what we can do, but how do we also get them in with the right, partnerships to raise future funding or partnerships to make money in the sector, especially because, like, I think Nzomo is the one who mentioned really underfunded space, but we want to encourage that and build that. And I think it's great to see MCV as well come into this with as much excitement as we have. I mean, Daniel has a lot of confidence in Web3, while a lot of other investors are still questioning it, not only in the climate space, but you can imagine for other spaces. So it only puts climate at the back. And I think Shirley also mentioned that a lot of marginalized communities are not open up to the possibility of what these climate solutions can do for them. So the fact that our startups are willing to go in there just speaks a lot. And it's great to see other organizations that actually have the funding come and support and back this. But I'd say our curriculum is a really big thing at Catapult and a really big thing for the startups that are in our program. And yeah, time will tell. First year for us in Africa, but time will tell, and it has shown that there's a lot of interest building into what our companies are doing. And I think the more conversations like this we have, even just leading up to then COP17 will help then show what these startups are capable of and how much funding they can actually raise. Thanks.
Thank you so much. Some great answers there. And I'm going to hand straight over to Daniel to give his perspective on those questions.
Yeah, sure. I mean, to be honest, I think there actually is a good amount of capital that's starting to move into this space. It's coming from impact investors. It's coming from development agencies. It's coming from mandates and like concessional capital being provided to local financial institutions to do green lending. Are we where we want to be? I mean, no, we're not where we want to be in terms of capital coming into climate in any country in the world, fortunately, and certainly that's true in markets in Africa as well. But I think we are starting to see that. We're definitely starting to see a lot more activity from the entrepreneurial side as well. Several of the sectors that we've been exploring are seeing quite a significant explosion in terms of entrepreneurship and capital that's following them. We look at the sort of precipice of growth that the electric vehicle markets really across Africa are experiencing, especially East Africa, but not exclusively. I think that's a really significant setting. And then just sort of coming back to the kind of the theme for this conversation around fintech for climate. We can see over the last several years that fintech's been the dominant venture class asset class in Africa, but again, not exclusively to Africa either. And where are the opportunities for highly capitalized fintech companies that have gotten to scale to be able to leverage what they're already doing to be able to provide financing for the sector, not just because it's a good thing to do, but because it's a smart investment. I think, we look at any investment we make, yes, with an impact lens, but more fundamentally with a risk and opportunity lens. And just like there are risks in, say, large U.S. banks providing significant financing to oil companies to do to extract at inexpensive projects that may not end up being profitable to take out of the ground, depending on the future trajectory of oil and policy implications. I think there's a similar consideration in the fintech space as well. So, are there going to be fintech companies making loans to industries that are dying or not going to be as strong or as relevant as a result of climate change? Perhaps. And so how do you put a climate lens on lending activities or on payments activities? And on the flip side, how do you look at emerging industries, whether that's in regenerative agriculture, whether that's in payments and savings products that can work across borders, that can be more flexible than shortages, whether that's in the energy sector or the mobility sector. And I think we're starting to see a lot of fintechs seeing the light and saying, oh, we've been providing financing for vehicles. traditional vehicles, and we start to provide that financing for electric vehicles as they're coming online, or for cold chains, or for or loans that are partnered with insurance products to de-risk the financing. We're looking at the relative risk from a climate standpoint of different geographies or different crops, and making sort of smart risk-adjusted decisions around how to lend and where to lend, guiding the borrowers that they work with to activities that are going to be most resilient to the effect of climate. So we're certainly not there yet, but I think we are starting to see this wave, and things always happen a little bit slower than hoped. But I think there's a lot of momentum. It's sort of pumping on everyone from the incubators and the entrepreneurs to the early stage investors, later stage investors. Public policy as well certainly plays a role in where capital flows to continue this wave.
Thank you. I think it's really interesting there, how when, we can talk about new ventures, and obviously we need new ideas, we need new innovations, we need people in the space, and we also need them to be, supported, whether that's through funding or, talent, knowledge, information to make their new innovations successful. But like, as you say there, Daniel, there's also the opportunity to put that kind of climate lens to already existing fintechs. And maybe a lot of the audience listening to this call will be in fintechs. And so actually being able to put that climate lens on and thinking about, can we fund solar or electric vehicles, or, how can we actually sort of fund things that are better for the environment or less harmful for the environment is potentially a way. And I'd love our audience, from my point of view, having heard you, that's one of my key takeaways from today. But as we go into the last 8 minutes of our session, what I'd really love is, A, if there's any audience questions, please pop them to us. But B, I'm just going to go around each of you and sort of, I'd like you to sort of kind of try and wrap up or leave us with one key message that you'd like the audience to know about or go away and do as a result of hearing today's session. Because, I think this whole kind of green financing, green climate thing is still very new in people's minds. And Zoma, I'm going to start with you. You're on mute. There you go.
Thanks, Sarah. I think when I mentioned about pipeline drought is both from an innovation perspective, but also from a mentor perspective. That we very few mentors who can be able to lead the industry or the growth in this area. So that we can be able to pull in a lot more people to be able to innovate and be able to support us in our climate resilience objective. But over and about that is addressing the adoption, the barriers to adoption, by way of facilitating enablers, such as digital payment rails, digital ID. But beyond that is largely looking at data that is available and even data that is not yet available, and finding new use cases around what is it that the industry can be able to do, to spur innovation, to spur development in this area. And I think a lot of work is in our hands to be able to support that. The innovators, payers, the funders, and the entire ecosystem for us to be able to make, the world better in terms of responding to some of these challenges. But beyond that is minimizing and mitigating on the risks. That would be my take. Thank you.
Thank you so much, Nzoma. Some great insights there. Let me hop over to Mame.
Thanks, Sarah. I think my parting shot would be, I think we are living in times where we're blessed to have a really tech-savvy population, people building really great things. So then just a generation that's very poised to be like a focal point for building like sustainable climate solutions, especially when it comes to food, which we all need, and the way we live our lives. So I think this is just an encouragement. Any investors in the space listening, I think there's a lot of benefit from the stuff we do. And even speaking outside of an impact perspective, I think it would be really cool to keep an eye out for who's doing what. And I think we can see that already. Thanks.
Thank you so much. Let me go to Daniel next.
Yeah, I guess I'd just say, as I was mentioning before, in terms of risk and opportunities, we always look up to, investors that are forward thinking, that are, looking at what's the world going to look like in 5 years, 10 years, and from an investment standpoint, how do you invest in companies that are going to be successful in that evolving environment? And I think when we do look at that, think towards what is that future going to look like and where there are opportunities. It's clear that looking with the climate lens isn't just sort of a sort of like a sectoral niche, but it's something that's affecting everything from international supply chains to water resources to food systems, and payments is the underlying element of what drives the entire economy. So looking at how are there, what types of solutions will there be that are climate thoughtful, climate responsive, that help to drive shifts and allow companies and individuals to respond to changing policy environments, changing business practices around climate, is something that just makes good commercial sense. And so I think my ending perspective would just be there are large industries that are evolving right now and are shifting. There's certainly need for startup innovation, but there's also need for seeing where there is space for partnerships. There's need for existing companies to look at what the climate risks they have are on their balance sheet or in their business model, and where there are climate opportunities for them to pivot or to grow towards the growth engines of the next 5-10 years. And so, from our standpoint, we're excited about this, both because it's something it's good for the world and good for the populations, but also around the world, but also because we think this is where the world is heading, and if we can play a part in helping to fund companies that are leading that change, and there's profound amounts of capital to be made over time as well.
Thank you very much. And over to you, Shirley.
Yeah, it's great to be last because then I can summarize what everyone else has just said before me. But I guess the narrative is true. I think the foundation is right. It's ripe for the solutions to come in. As I guess Dan mentioned, funding is not ultimate. It's not at the ultimate space we would want it to be, but it's there and it's flowing and it's coming. And those are the investors saying there's not enough to invest in. So for anyone looking to develop innovation solutions, right now is the right time to sort of look for funding, to get the support. There are programs like TECA, there are programs like Catapult, there's programs like Massive Ventures and FSD Africa. So they shouldn't hold back on that, even with the technical assistance. If you do not know how, now there are more programs coming up, starting the journey with you right from the beginning, from the different hackathons that I see being run more commonly, from venture launchers and venture studios that are coming into place like Factory. There's just so much support coming into the space, so take advantage of it. Even the policies are changing, as Dan put it. Then the other thing with tech is that we are not where we were, let's say 5 years ago. I know we worked on solutions or programs where we were aiming, or rather wanting to leverage the proliferation of smartphones. But now it's becoming more and more accessible when you talk about smartphones or just basic phones. So in terms of scaling a solution, coming up with the right solution and then leveraging technology to scale, now is the right time. So that will be the summary for me. Now is the right time. Don't hold back. For those who have solutions, feel free. For instance, with the TECA program, we have a community page where you can follow all the other innovators that are working on the different solutions and be inspired, maybe even contribute to the ideas and work together, learn through their journeys as you build up to your journey.
Thank you so much for doing such a wonderful job of summarizing there, and Shirley. And I just encourage everyone who's listening to. This is, as Shirley said, this is a right time. This is a time for us to really move things forward, push things forward. And I'm also really excited that we also managed to talk about things like data and technology and payment rails in today's session, because you'll find more conversations about those very things over the next 2 days. that is left for Pathway to 17 Summit, because actually there's so many things intermingling together to enable FinTech for climate resilience and all of the work around climate resilience that we're doing. So if you've enjoyed today's session, I encourage you to log on tomorrow and join more. Thank you very much to my panelists today, to Timame, Shirley, and Zomo and Daniel. I've really enjoyed chatting with you. I wish we could speak for longer, but for now I'm going to close the session, and I really hope that the audience really enjoyed it, and I look forward to speaking to you all again soon. Maybe we need a panel again in a year's time to lessons learned from some of those ventures and find out, more about where we are in this particular field. Thank you so much, everyone. Bye-bye.